Hey guys, welcome to 21st Capital, another episode of Bitcoin Quants with Crypto Wizard, senior analyst at Glassnode, one of the smartest analysts in the space. With Crypto Wizard, senior Why do I hear myself again? Glassnode, one of the smartest analysts. Hello. Okay, something maybe mic was breaking. So yeah, hello. Okay. Okay, testing again. No reverb. All right. Hopefully. Okay. Welcome, Zeke. How are you? Do you hear me?
Oh, yes, I'm doing fine. How are you doing?
Very good. Very good. We had an interesting glitch first time this happens, but we'll have to remove this later.
That's Bitcoin pump, sir. Like everything is pumping, streams are going down, and I mean it's totally normal. Everyone going crazy.
Absolutely. All right. So today the goal is to understand where we are. Bitcoin has been ripping lately, and a lot of very exciting price action has been happening. We had a little bit of pause lately. So if you see the screen, we have had a fantastic run so far. In the last 7 days, which I'm showing here, we've come a really long way, like 20% increase. We shattered the all-time high after a couple tries. Then we couldn't stay there. We crashed down a few days ago, and right now we are back up. Bitcoin doesn't give you any break. As soon as you feel, you know, the price has gone down and you feel like there is a breathing room, it quickly goes back up. This is an important feature of strong bull markets. The dips are bought very quickly. So last 24 hours, we've gone up 3%. This has also been, a fantastic year overall. And the question for us today is how likely it is to continue where we are. Are we going to consolidate around this level for a while and then go up, or maybe um, we are already there? So we're going to talk about several things. I'll quickly show you a few updates on my valuation models. You are probably by now familiar with this model. This is a power law, an average regression. This is basically shows us the trend. Now, Bitcoin, that trend line, the power law average, is at 80K right now. We've been commenting on this gap has been creating, and the point, at least in the last 15 years, throughout Bitcoin's whole history, it has remained kind of fluctuated around. It hasn't deviated too much from the average, unless in the bottom of the bears or the top of the bull market. So this deviation itself is an interesting thing to track. And we've spent a lot of time below it. We came back up, and now we're ripping higher. I turned that deviation into a metric that goes from 0 to 100 and shows us the heat of the market right now. So on that metric, 50 is neutral, and because we are now above the average line, we are a little bit in the moving towards the hot zone, but we still at 56 for volatility adjusted power law index. We are still at a neutral position. So if you're thinking, this is already too late, no, we are just at a neutral valuation, slightly above the average. And here's another regression model. It's a quanti-regression model that tries to model the top 1% and bottom 1% and all the other percentiles of the data set And this helps us have a general sense of what are the possible ranges of values. I What's in my mind is a distribution of prices, which goes a lot higher than this and a lot lower, but the probabilities of things outside this channel is low. It's not impossible, but at least based on this model, it's low. So if you look closer, this is where we are at 91K. And it's very curious that exactly at these lines that I've drawn, we had a little bit of break. So these lines were drawn well before we reach each of these points. So essentially what I've done here is I've broken all the possible quantiles. You can identify 100 different quantiles and more. But I thought just try to simplify the analysis. I tried to look at a small number of regions for probability. And then I discovered that if I break the probability, the distribution into 3 buckets, so from 1% to 33% to 66 to 99, then we get actually meaningful regions. So if you, again, let me go back to this one. If you look at it, my blue region is basically capturing most of the bear market times, like the bottoms of the ocean. And again, these are like the 33 percentile range. Essentially, this is the lower one third of Bitcoin valuations. So Bitcoin spends a third of its life in that region. And then in the green region, if you notice, like we spend a lot of time in the bear, right, in the blue region, but then we have this transition phase when we get out of the bear region and we start to kind of get the fuel for the actual move into the bull market. And if you look at the last cycle, again, we spend a lot of time in this blue region, a lot of like boring, sad, depressing price action, but then we suddenly came out, and this was facilitated by ETF approval. And then again, curiously, ETFs took us all the way to the boundary of the next region, but we weren't ready for that. So we took 7 months of consolidation, and now we went back, and then we actually are now taking a break right on the boundaries. So seems like if you look at this, like Bitcoin actually hit this and went back, seems like it wants to spend some more time in the warm-up. I call this a warm-up region, right? Right now we're just warming up little by little, and you can all feel that energy is building up. We are not in the crazy price action region like this one, the red, where actually like the masses arrive and FOMO begins. We are not there, but we are on the boundary. And when we get in the red zone, FOMO cycle accelerates, price goes up rapidly, much faster than we have had so far. And just that fact makes everyone aware of Bitcoin. So everyone and their grandmother in every dinner, a party, and every family event, and every chat room, they're going to talk about, oh, have you heard about Bitcoin? And that's going to create a lot of FOMO. That's going to bring in a lot of new investors. So that's why once we get into the FOMO zone, it just feeds on itself and takes us a lot higher. Okay. And with that, also a lot of risk accumulates. So many, levered traders with short-term mindset are going to take positions. People are going to feel they are left behind, so they are going to be super, super aggressive. So as we reach higher levels here, particularly closer to the 90 or 95 percentile on this model, that tells us like historically, if historical patterns continue, these are the levels that have a low likelihood of getting broken. So you can, and you don't even need this model. You can just monitor the sentiment out there, and you see, as I guarantee, as we get up to here, you're going to hear astronomical price target. This is actually an absolute guarantee. Once we hit, for example, 250, 200,000 or above that, right at that point, people are going to talk about $1 million in a couple months, and they're going to bring in issues like, hey, who knows? Bitcoin is running out. Exchanges have no more Bitcoin. A supply shock is around the corner. And when you hear those $1 million, 500,000 predictions, who knows? Somebody else is going to up everybody else and say $10 million. Who cares, right? You can just throw out a number. When you hear those things, that's going to tell you bull market has run its course. But that's the general my general take on where we are. I'm excited for us to get into the FOMO zone, but at the same time, I'd like Bitcoin to give us another scare and allow us to kind of spend some more time in the warm up region to give everybody a better entry, more entry points, and accumulation time. Because once we get in here, it's going to be very difficult to keep adding, just because you see so many crazy action going on. So just risk will build up. Okay, that's all I have. I'll let Wizard continue with some on-chain fire. Over to you, sir.
Oh, thank you for opening the discussion. Yeah, like it was crazy. I mean, it was from nowhere, and that's the beauty of this market, like you said. Like pump can start anytime, and people like you and I, when we emphasize on the fact that DCA is the only way to survive in this market, actually we talk about this unpredicted move, and people who are enjoying this pump. Yes, some new buyers, maybe they dumped their money recently, but over time, if they become super used to this, okay, whenever I put money in Bitcoin, it's going to jump, and that's the story from now on, they're going to get disappointed. The beauty of Bitcoin pump is much better perceived by people who DCA'd all last couple of years, and they waited and waited, and they are much more less sensitive to these pumps and, I mean, crashes. That's the way to go. And today we're going to talk about the recent pump, who was the main driver, what was happening, and then those kind of information is going to help you to have a 3D view, a holistic view over the market, and eventually you will see sometimes having this data, you're going to act much more rational. That's the goal. And let's just look at the data, and whenever you see there's a, I mean, wake point or something need to be explained more, please let me know, because I talk really fast, which I shouldn't. But I think the best point to start is the week on chain that we at Glassnode put out a couple of days ago. Even though a couple of days has passed, but I mean the charts are still relevant, because while we were writing this report, we were thinking, okay, it's going to be a rally. People are going to have a lot of questions. Let them know who is behind this pump. That was the main question we were answering. But updating the charts is going to help them. Okay, who was selling? And I'll probably add a couple of charts to this report to just shed some light on the recent 93 rejection by 92, 93, then when going to 88, and now they're pumping again. The first beautiful chart that I thought it's actually really relevant to the recent pump was the all-time high that we saw a couple of days ago. It was not just in USD. Obviously, it was because people who are coding Bitcoin in USD, they get used to the fact, okay, all-time high in USD is just like what I'm sensitive to do. But if you look at across the board and look at the forex assets, you'll see that all-time high is happening across many major currencies. Like, for example, Canadian dollar, Australian dollar, all of them are like having some all-time high at the same time. But the point that caught my eye is Turkish lira actually had all-time high in June this year, which was really crazy. And the only currency, I mean major currency, if you call it currency or asset, forex asset, is gold, that we are almost 5% below all-time high, because the last all-time high in gold that we had was back in 2021, and now we're really close 5% to just have an all-time high in gold as well. That was the first thing that caught my eye. Then, as you know, we had election, and that was a big factor. A lot of uncertainty was actually causing people double check their decision. Is it a good time to enter the market? But this was not the first time we had that uncertainty shadowing the market. If you look back, I mean, since 2016, the first time that the Republican were actually, the Republican got elected, but before the 2016 election, we had a similar, divided environment in the politics side, and that uncertainty was affecting the market. If you look at last three elections, including the recent one, you could see this chart. First of all, I have to say what this chart is showing. The solid line in this chart is showing from 6 months after the before the election to 6 months after the election, how much money, what in percentage wise, how much capital was flowing into the market before and after. And the bar chart, the solid, not the solid line, the bar chart is showing the price performance. As you can see, there's a correlation. Money coming in, price goes up.
So
But if
what's the measure of capital? Is
it's
that
in the realized
realized?
page. Yeah, it's changed in realized cap. So percentage wise, before the election, 6 month election to the day that election, if you look at the numbers, for example, in 2016, 20% of the capital inflow to the market happened before the election, and 55% was added after election. 2020, when the Democrats actually took, the presidential, took the White House, 16.5% was added before the election, then 196. It was COVID time. Check was coming, and people were printing money. It was crazy. But 196% was added to capital after election, 6 months after election.
And this is 6 and 6, right? 6 months before, 6 months after.
Exactly. As you can see in all instances, before election, the rate of capital inflow is slower, but after election, it's just skyrocketing. It's obviously because all those
Oh my
uncertainties
God.
is just going away. And guess what? No matter who's elected, it's blue or red, they are printing money. So in all instances, I'm not gonna see the although every day in future, near future, but look at the history. Every time any color get into White House, they are printing money. Well, the slope might be different, but all of them is upward.
So
The
so
recent
let's quantify this, right? In the first instance, you had 2 to 3 times more capital flow after the election versus before. In the second one, you have 15x, which was
almost.
amplified by COVID. In this third one, we are, what is it, 2%? Okay, so uh,
Let's look at
already,
the recent number. It's like a
uh,
recent number, which is almost today, is almost 4.2%, and the price is already up 26%, and it is crazy. Like when you look at this number,
and
and
nothing has begun. It's only been a week. So
yes,
we have
yep,
6 months more of this.
yeah,
This is amazing.
yeah. I mean, like I said, the point that I just got from this chart is not gonna. I'm not gonna say we're gonna replicate any of this. It might actually go even further. I'm not just giving a number, but look, printing money, Bitcoin goes up. That's the what you can see here. So far, we're just the beginning, but you can see it's beginning. Like we are almost here if we compare with the recent, or we are here. So
And in
election
fact,
wise,
in
yeah,
fact, I think the catalysts are huge moving forward. So a few catalysts are going to shape where we go will be, first of all, a lot of people in the new administration are supposed to be supportive, right? So they might actually help a lot of the you know rules and laws to move forward. There is probably MicroStrategy being added to more indexes, S&P 500. There is this change that's happening. The accounting rule, FASB accounting rules are going to change that to allow all the institutions that hold Bitcoin claim it as earning. Right now, the accounting is horrible for Bitcoin for institutions that have it. So that's going to have a difference. A strategic Bitcoin reserve might happen, right? People are working on it. Cynthia Loomis is spearheading the efforts. That's another thing. And it just feels like to me like everything is cooking under the surface. Everything is ready to explode. Even though we've had a lot of price increase lately, but this is all just seems like a few first bubbles that have come to the surface, and a lot of catalysts are on the horizon. So I would say maybe it's possible that we won't go as high as the COVID time, but I actually see us much closer to the blue example than the red one moving forward.
yeah. And when you go back, like every single example that we follow, like, I mean, I was obviously COVID was, I mean, amplituding this effect after the election. The uncertainty was over, and market was reacting to all the money was printed. The big difference this time is, which I'm going to talk about, is that uncertainty is over, sure, but who is buying? You can tell this rally after election, even though we're expecting the retails joining the rally, but so far it's been institutional driven. That is the beautiful point when you compare it to the recent one in 2021, because 2021 people were sitting home, they're getting their check, and why not spending some of it on crypto thing
Yeah.
that everyone talked about, right?
So exactly. So actually, we have a question. What happens if recession comes in 2025? So just think about what happened in COVID time. Everything crashed, horrible, right? But policymakers have they have practiced this already. Like as soon as the markets crash, because our system cannot tolerate uh, a reduction of asset prices. Our houses, our stocks, our bonds, all of that is pledged 1,000 times in a chain of rehypothecation for other loans, other investments, other stuff. So if the stock market crashes, there's just so many positions by so many institutions and investors and individuals that have to be liquidated. So it's going to be literal mayhem, and economy is going to come down to a standstill. So policymakers have learned the lesson, and they just cannot allow significant crashes in these markets. So you might get a crash, but they will come back quickly with all those checks that they can print with a click of a button. And uh, if that happens, actually, it gives you a wonderful entry position before everything explodes higher again. That's my thought. What do you think?
Yeah, I mean, people are saying and they're repeating that Bitcoin is a risk indicator, but you should understand what do they mean. I mean, when there is an appetite for risk, Bitcoin is front running the best indicator to see, okay, risk is on. And risk on means like politicians are going to save the economy, as you said. By saving the economy, they mean they're going to borrow from future, from my child, my grandchild, and actually pump all these assets. And Bitcoin is the magnet for all this money to be printed. And I don't know if anybody questioned that now. It's totally obvious. Like Lynn always said, no one can stop this train. And I'm every day when I see news, any title, breaking news about, okay, that politician is going to do that big thing, it just translates to me that they're going to print money, and Bitcoin is going to absorb, depending on what phase of the market we are, they're going to absorb a part of that liquidity added to the market. So given we were talking about this rally is different, even though yes, election is over and the pattern is repeating itself, but the driver of this rally was institutions, and that was very very different from what we saw in 2021. First of all, that last week's weekly candle in dollar, denominated in dollar, was one of the biggest one in history. I think it was actually all-time high. It was almost 11,000.6 US dollar in 1 week. That was the weekly change, which was all-time high in Bitcoin history. That was crazy. And when you go look at that rally starting there, let's say July was, I think, yes, or early September. When you look at that uh, spot buy, look at the Coinbase, which is a proxy for institution in North America and US. When you look at the CVD, which shows the bias on taker side, starting
So can you
early.
explain that one? A
Yeah. So
cumulative volume delta. Explain what that is.
yes. So when you look at the order book, we have two sides: takers and buyers. Takers and when we look at the order book, someone put a limit order, and the takers are the one that are filling the orders, right? We are looking at only takers in this side and looking at the difference between how much they bought that specific time frame and how much they sold. If on net they are buying, and the takers are buying more than what they're selling, we think there is a positive bias. They are the buy pressure by the ones that go to the market and actually fill those order is towards buying. If it's negative, that means they're more selling. So that's a sentiment among the takers, the people who are filling those orders, not the makers. So positive number, that means there is a aggressive buy pressure by these takers, the people who fill this order. A negative number means they're selling on an aggregate. Why we are focusing on Coinbase? because most of these ETFs, they are filling their order books by OTCs and order books spot market like Coinbase. And most of their clients, the big clients, are institutions that we are trying to cover. MicroStrategy, all these big companies that you hear their name on Twitter, on news platforms, they are dealing with Coinbase. That's why their order book is really important. The spot market I'm talking about. What I want to talk about is since early August, you could see every dip, every rally was supported by a buy wave of buy pressure in Coinbase. They're really, really resonating with the each ups and downs since August. You could see the buy pressure at Coinbase spot market was supporting every rally, and every dip you could see yes there was some weakness in buy side or some selling actually, but the starting I think it was early November, right after the election, you could see the huge wave of buy was coming to Coinbase. It's actually comparable with what we saw in March. It's pretty the same. And I think when you look at the 7-day moving average, it was 143 million per day. That's the moving average, a smooth value. So you could see the spot market in Coinbase was showing in a strong buy, and that's institution. That's the North America, market.
And it seems like this is not following the price necessarily. Like some of the positives happen actually when the price was going down, and then you could have seen the green buy pressure exactly right there. So the price
Yeah.
is actually down, but if you look at that buying metric, you would see
Mhm.
that you would get good indicators for what's coming. And then it also seems like a lot of those small corrections happen when the inflow, the green begins to subside and go down.
I
So
mean, that is buy the dip. That's the buy the dip part. Really good time buy the dip, just right before the rally. So that's buy the dip. That's in Coinbase. And when you look at the ETFs, and given that most of those coins that BlackRock and Fidelity, I'm not sure about the full list, but most of them are having working with Coinbase to do the custody. So that gives me the um, understanding that they are filling their orders by Coinbase as well. So there is a connection between the ETF demand and institutional demand and spot CVD of Coinbase. So if you want to look at the full picture and zoom back, you could see because one of the big topics that we were talking about in Glassnode and Checkmate talk about a lot about it. There was a cash and carry trade that was going on because the CME, I think we talked about it in the first episode. We were covering the CME, OI, open interest, which is the orange one, and the IUM or asset under management by ETFs have a really strong correlation. What does that mean? That means most of coins going to ETF has a confluence with increase in the open interest on CME. That means they are buying in a spot and shorting in the futures market and pocket the premium, right? That's the cash and
in
carry.
other words, whenever you see a huge amount of inflow into ETFs, you also see open interest jumping in the futures market. And the interpretation is the the manager of the ETF also tries to hedge immediately in futures market. Is that right?
Hedge or pocket, cash and carry trade, which is the 1-to-1 ratio. That means you buy one Bitcoin in spot market and sell one Bitcoin on futures market, CME, and you collect the premium from long side.
So
That could be,
actually, yeah. So two things might be going on. So one is the ETF operator immediately hedges, because the hedging also happens because when somebody orders, puts in a huge order to buy ETFs, ETFs don't immediately hit the spot market, right? It takes
yeah.
they execute it at the end of the day or something, depending on whatever contract agreement they have. But the price movement can really leave them vulnerable. So my theory has always been that when as soon as they see somebody buying a share of the ETF, they have to hedge it in the futures, at least fix the price right there, so they are not hurt by exchange, but by rate movements. And then actually later I confirmed it with someone, a veteran in Wall Street, and they said that's what they think as well. So that's one thing. Whenever you have huge flows, you see some futures actions. But what you're saying right now is there might also be institutions that use ETFs to a significant degree for cash and carry. So that would involve buying the spot and also buying the futures together.
Yeah, short in the, I mean,
Shorting, yeah.
yeah,
Buy here, short over there.
yeah. So that is a good and bad thing. Good in sense that institutional are getting involved because they have more financial vehicle to involve. I mean, expose themselves, have some exposure to Bitcoin, even though it is through cash and carry. The other thing is that I have to emphasize: we're not saying every single Bitcoin bought on Ethereum. Sorry, ETFs are literally is a part of the cash and carry strategy. Some of it is actually a spot buy. And what was beautiful in this recent rally, even though you could see, yes, institutional jumping in and there is some cash and carry going on, the rate of increase, which is the blue line, in ETF IUMs or inflow to the ETFs was way, way more than what was added to the open interest of CME. What does that tell us is, yes, there was a cash and carry going on, but the spot portion, the one that actually bought and they were directional and added to their portfolio some Bitcoin through ETFs, were outpacing the ones that were doing cash and carry. So that was a strong buy. I think on the peak, because we have to wait for today close candle to see what is today's number, but at its peak, November 13, 9.6 billion, that is a big number. 9.6 billion was the added in dollar value to the ETFs in that month, in last 30 days to November 13th. So compared to the almost 6 billion added to CME, even though we assume all that 6.4 billion on CME was equivalent to 6 billion added to ETFs for cash and carry, because it's one-to-one, there's still around 3.2 billion in added to ETFs they're outpacing the added value to the CME open interest by 3 billion. That means the coins that were added to the ETFs for just sake of being long in Bitcoin, it was huge. So that is what I was trying to show, that even though we had a cash and carry going on since March, you could see we're really close. But now the amount of money added to ETFs, most likely to just be long in the market, it was crazy. That difference is what we really care about.
Awesome.
Yeah. To just shed some light, I mean, this is so huge. Yes, institutional buying, and we just showed Coinbase opening CBD, spot CBD showing aggressive buy, and they are representing the institutions most likely. And also ETFs are adding much more Bitcoin to their asset under management compared to what we're seeing in CME open interest. Just look at this chart. Sina, have you seen this?
Let me see. Flow to. Oh yeah, yeah.
Oh,
I mean, this is mind-boggling. Yeah.
yeah, it's just I can I just look at this and I don't need to look at any other chart. This is actually showing the amount of dollar added to the ETF's gold, which is the red one, since the day that it started to work, and this is showing
And
Bitcoin
this is
since
2004,
or five.
right?
Like I don't know what was the
4 or
starting
5.
date.
Yeah.
Yes, but I mean the equivalent. Look at the same amount of days passed in Bitcoin. It's just enormous. I think if you put it here, it's almost close to 1200 or 1100 days. So whatever in first 1100 days was added to, it's almost 3 years, 3 or something years, added to gold was added to Bitcoin in less than 10 months. It is crazy. Like it's just the
I
amount of
think
money is coming.
even if we adjust for inflation and all of that, this will be how many times, like, one third, 1/5 faster, 1/4 faster after adjusting. So
Yeah.
yeah.
So that tells you, like, yes, it's another way to show the institution are actually behind the recent rally, specifically compared to the March rally. This one is much more important because you could see it is purely spot driven, and that spot buy is mostly coming from institution. To just prove my points, there's another on-chain data that I really like, and that's the fee that is paid. I mean, total fee that miners are collecting, and that's total fee. I mean, it's the block subsidy plus the fee that people are paying to get included in next block. More fee they're paying, that means there are much more retails there. There are much activity going on. The recent rally, when you compare it to the March rally, is way less. That means the retails are not here. I'm not saying there is no retail in the market, but if you talk, I mean, in comparison with what happened in March, the activity is way less than what we saw in March, and that tells me yes, institutions are there, and those pressure that you saw in spot market was mainly coming from big players, and that is beautiful. I think retail might come and join the party a little bit late, like always, but the fact is, it was mostly institution behind this recent rally, and it is crazy.
Awesome. Yeah, exactly. I mean, that shows it very clearly. Most of the transactions are happening in wrappers or outside of the chain. Could be ETFs, but and we don't even have a lot of action on say Lightning or other places to say that's the reason for rally. So it's most likely going to be the ETFs or um, perhaps futures. But yeah, but the big player is the ETFs. Um, maybe mm, maybe also you know MicroStrategy could also be involved, or some other institutions as well. I
Yeah,
don't think any of these would buy immediately. So would buy an amount that's immediately obvious through on-chain transaction. It's going to be a huge block with a very little fee, managed by someone else, maybe Coinbase or some other institution. So that's completely different than a lot of small transactions from retail.
yeah,
So this I think is a very valid indicator.
yeah.
So what is this one?
Yeah, so right now, I think the question that is on people's mind is, okay, how much room is to grow? Like, how much room left? Yeah, we hit it to 90, and that was a huge psychological threshold. I mean, 90,000 USD. And when you look at Canadian dollar, it was almost 120,000. I'm not sure how much was in Aussie dollar, but I mean, it was huge, above 100,000 in our currencies. It was a huge psychological, barrier, and it was broken. But the question is, how much room is, left to grow? How much higher we can go? No one can say for sure, but I want to show some chart to navigate the current market structure. By navigating, I mean we look at the last 2 or 3 market tops and see what is the similarities, how higher we went before when March 2024 or 2021 market tops. We want to compare with those specific periods, different couple of indicators, and see how much room we have to actually go up if market keep going up. So I will have to repeat myself. It's just not a prediction. It's just literally in statistical analysis how much market can get overheated. Speaking of like how market is overheated, how much is, I always go to perpetual and just start from there. Why? Because it is one of the very well established tools thanks to crypto market, and I'm pretty sure in TradFi they're going to adopt this perpetual concept. But I mean, it's so easy, and you can have leverage, and retails are usually showing their appetite towards the market via this perpetual market. I think you had some chart actually to show the funding rate. Do you have them?
Yeah.
About how, yeah, let's
Yeah.
look at them, and then I'll add my chart to your
Yeah,
charts.
this is also fascinating. Like always, I find a lot of value in understanding the futures and funding rate. So here I'll explain this. On top, you just have the price of Bitcoin, and in the bottom um, you have the funding rate, but it's aggregated by open interest because just simple averaging is not going to help us a ton. Exchanges are really different. So we are weighting by open interest, and then we are looking at daily. Now, notice how nice and predictive this thing is. In the March rally, after all that ETF firework, for a while nothing was happening, so the market was actually getting ready, and some pump happened. But after that, funding rate jumped. And for those who don't know what this is just the amount of money that the uh, traders or speculators in futures are willing to pay to keep the position open. So um, it can happen on both sides. Positive funding rate means people are paying good premium to open and keep long positions. And if it's really high, that means people are so bullish, so too much bullish even, that pushes them to, um, accept such a high premium for possible gain. So that essentially tells us something, some gives us a measure of sentiment. People are super aggressive, and some aggressiveness is fine, but when it gets to super high levels, that tells us that this is, there's a lot of risk and there is imminent correction. And you see, funding rate really went high, and then we had a little bit of a crash, and then another time, and then we had a bigger correction, and funding rate corrected itself. We went back up, funding rate up. Now it's on sustainable level, so we come back up. But then we spent, and a lot of the like bottoms of the local bottoms of the last few months happened exactly when the funding rate was in the negative territory here. Essentially, I had a rule that whenever funding rate is negative, that's very likely to be a wonderful buy position. Now, where are we right now? So if you look at it, as we shattered the all-time high and went back down, funding rate jumped. So this is again another indicator. You see how much higher this is to compare to the last 7 months. This is another indicator that this rally is mm, there's a lot of leverage also following the rally, and that's typically not great. And when it reaches to high levels, the risk of returning back down is higher. So the market had a little bit of a correction, right? Very small one, and that was enough to liquidate so many of the extremely long positions. And now funding rate is back to much more um, nicer levels. So essentially, we washed the leverage, so the risk went down. Right now, 91 right now is much better than 91 a few days ago, which coincided with this huge funding rate. And just to confirm that, this chart is showing not just Bitcoin, but every other coin out there. And you can also see that in November 11th, the market was really heating. Not a huge amount, nothing comparable to March, but it did heat up. And then right now we have cleaned it up and we are back to deep green on many assets. Maybe not these ones, DOT and the other ones, but you got to look at the overall thing, because individually some of these coins experience crazy price action and so on. But Bitcoin, Ethereum, Solana, they're all back to green. So that issue, that risk that was coming from the futures, that's out of the way.
Yeah, like you said, the funding rate is the interest that the long side of perpetuals are willing to pay to keep their possibly high leverage position. And the way we can actually give some weight to this, because funding rate is a little bit hard to understand, it's just because it's a ratio and it's percentage. If I want to explain it better, we can have the open interest. That's the volume in dollar. I mean, when you measure the volume of all open contracts, we can measure it in open interest. If you multiply the open interest to funding rate, we can actually calculate the amount in dollar, how much money the long side per hour, per day, whatever is your time frame, depending how often you want to look at the market. Here I show the hourly aggregated value of the funding rate that being paid by the long side. Back in March, when market was going crazy, per hour, I think we hit it almost $2.7 million per hour. That is just the funding rate. Or in early stages, we were hitting 2.1 million, and probably late February, 1.5 million. That was the hourly. And when we do a smooth it per week, it was almost 300,900 per hour if you do a smooth it. So what does that mean actually? If we zoom back, the recent rally, this indicator, which again shows the amount of money paid by the long side per hour, when market was hitting, breaking above 90,000, almost, yes, it was almost 87, 89. This metric hit at 2.7 million, which is comparable and actually a little bit higher than what we saw in top in March. So that might scare you. So, oh my God, the hourly is really, really close to what we had in March. Is it top? I would say no, because if you do a smooth this chart on a weekly basis, which is literally an aggregation, how sustainable it is, we have to look at the smooth version. The smooth version or long-term aggregated value, it was reaching the blue line. That's what I'm talking about. Reach around 1 million. That means on a weekly average, those hourly payment by the long side reached to $1 million. But the recent jump that we saw in the fund rate when we look at the hourly number was not sustainable, like you said. As soon as we corrected and rejected by 92, market got flashed. Well, I mean, all these high leverage position got flushed out, and the funding rate dropped. So what we have to look at is the 7-day moving average of this metric, which I think right now is around 600,000, and it's almost less than half of what I mean. Sorry, it's less than $1 million that we saw, or one and something around $1 million that we saw back in March. I'm not saying 1 million is exactly what we're going to hit, but comparatively speaking, even though we had a spike in funding rate payments in early 2000, I'm sorry, the November 13, November 14, but because it was not sustainable, that overheated status was not actually continuing. If you look back in 2021, we had these one, two, three, four, five, almost five wave of this interest or appetite to go, I mean, long in the market and probably and possibly on a high leverage position. So we had one, and comparatively, the value of weekly moving average is way less than what we saw in March or we saw in 2021. But we have to look at it every day and just look at it. What I'm saying, we have to monitor it, and when it topped out and on a really large number and continue to that large number and stop going up, that is possibly where we can say, okay, it looks like the perpetual market already exhausted the demand side and we should be scared. But so far, yes, the hourly was crazy, but when we look at the weekly value, it was not as long as what we saw in March or in 2021. That was my point that I thought
So
like
what
was
would you say
interesting.
is the difference between the signal you get from open interest versus funding rate? Are they kind of the same things more or less, or do they tell us different things?
Because look, funding rate is a ratio. Like let's say two different time in history, we might have equal funding rate. Let's say we had a funding rate here that was like 0.1, and we had a funding rate here as well 0.1. If we do not add the open interest to equation and simply look at the funding rate, we are not looking at the magnitude of that appetite. Funding rate is showing the intensity, how much appetite they have to go along. Open interest shows that appetite, how dominant, how large it is. So having the funding rate plus open interest, it tells you that appetite, how big it is, how intensive it is, because these two
So
are two dimensions.
would you say then one has to look at both charts, and when both of them spikes, that's just much more important than if one does it?
Exactly. And the best way to look at both is multiplying them together, because that's actually something meaningful. Is the dollar value that the long side is paying to the short side. That is why the multiply that, because sometimes you can multiply two different concepts just by random and get some indicator, but this one actually makes sense. It is a value that has a meaning in real world, and that's the dollar value or dollar volume that being paid by the long side. That's why it's important. Yeah, funding rate by itself is really important, but I always put it next to the open interest. That is
Yeah,
really
and then
important.
one possible challenge is as price of Bitcoin goes up, it just makes it harder to compare today's levels to last cycle. So this is probably something we can work on later, maybe normalize it somehow to
Yeah.
get rid of that price differences. But
Mhm.
I think one of the best ways to look at this is if just compared to last month or last week we have a spike, then that tells me a lot of that is not just because price changed. It's a lot of it is the speculation that increased.
Yeah. So now we spoke about the perpetuals. I think the best part is talk about some on-chain data and see. I mean, comparatively, if you look at the cycles that we had before, where we are in terms of profitability, who's selling, that kind of questions always comes to me, and I try to just answer them. With on-chain data, because that is the data that covering a lot of. Because when you focus on the spot market or perpetual market, you are focusing on a small portion of this, Bitcoin ecosystem. But when you look at on-chain data, you're including all activities in and out of exchanges, all OTC deals, even wallets that are controlled by the ETFs. Even though they're off-chain, their trade is happening on-chain, but the inflow outflow that happens by the end of the day is going to reflect itself on on-chain data. That's why on-chain data is really important. I want to answer the question, like when we had that top by 93, 92, who was selling actually? And what was happening? And what is the equivalent point in previous market cycles when we broke above 90, 91? We call that phase all-time high discovery. What do we mean by all-time discovery? We mean more than 95% of supply is in profit. That's the name we choose, and that's the structure we talk about. When market is breaking above the previous all-time high, most of coins, all coins that have been moving on some prices or being purchased at any price before, is going to be in profit. Yes, we have an intraday fluctuation in price, and that 100% might just fluctuate between 95 and 100. But when 95 plus of supply is in profit, we call that a all-time high or new all-time high discovery phase. As you can see, we pointed out here, let me zoom out, like the last 10 years, we had that a couple of times, like look, 2016, 2018. Every time that we were having a rally pushing to a new all-time high, we were saying, okay, more than 95% of coin were in profit. Back in 2021, 2020, all the way up, we were in an all-time high discovery. And in March, or recently, after we broke above almost 67, 68, early in October, we were in all-time discovery. The question that someone might ask, how long this all-time discovery phase has lasted? I mean, how long is, were we 3 months, 4 months? How long we continue to be in all-time discovery, where more than 95% of coins were in profit? When we look back and look into history on a monthly basis, usually these rallies continued between 1 day or 2 days, like what we had in August. We had a quick all-time high discovery. We were getting close to the recent all-time high, and more than 95% of coin were in profit. It could last between 1 day to 30, 32, 33 days. That means 33 days in row, we have the price going up and putting more than 95% of coins in profit. And as you can see, it is not sustainable. It cannot go forever. But when we compare that monthly framework, and you can just compare, okay, how many days of last 30 days we were in an all-time high discovery, you could give you some sort of indicator to see how far we have gone. Like today, when we look at it, is almost 16. That means out of last 30 days, 16 days, we were pushing the price up, and more than 95% of coins were in profit. And historically speaking, we had that phase going on for 30 days in some instances. So comparatively speaking, yes, we have came a long way, but when we look at the extremes in historical data, it is not as extreme as what we saw, for example, in late 2021, or what we saw in January 2021, or what we saw for 4 or 5 times in 2016 to 2018. And that's really beautiful. It shows there is some room to grow if we repeat ourselves historically.
Fantastic. Awesome.
Yeah.
So seems like we are getting a lot of positive signals. Of course, that doesn't mean we're out of the woods, or we can have a short-term immediate pump. But it seems like, wherever we look, it's really hard to find bearish information. So
Yeah.
I think it's a very interesting time.
Yeah. I mean, when you add the next chart, is even getting more interesting, because what we talked about, it was just 95% or plus of coins being profit. And why it is important, because when most of coins are in profit, we are getting closer to the moment that some of them, or most of these coins, getting the incentive to spend, to get out of the market, right? But since we entered, like I said, 16 days of last 30 days, we were in this phase. The next question is how much profit they actually took off the table. That is the important question, right? How much money they actually made by exiting. Because when the market is in all-time high discovery, when 95+% of coins are profit, they are most of them are, or the ones that were waiting, they're spending their coins, right? And when they spend too much, they can exhaust the demand side and we can enter the bear market or a correction. As of today, because this is an hourly, in last 30 days, while we were in the all-time high discovery, during that 16 days that we were in those phases, we almost saw $22 billion profit being taken off the table. They were seizing the opportunity, they were in profit, and they're spending. That 22, I think it was in the last couple of days. Then, as of today, I think we are at 37. 22 was in back in, I think it was almost 22 was in November 12th, but right now it's 15th. It's 37 now. 37 billion dollar profit was taken in last 16, 17 days. When we compare this value to the previous all-time highs, like what I pointed out in March, or what we had in almost in late 2021 or early 2021, this number usually, we cannot compare that with long time ago. We can compare them with the recent rallies. We had plus $60 billion taken off the table during its rally when we look at the all-time highs. I'm not saying we're going to exactly reach the 60 and market is going to crash. We might actually go way, way higher than that. I'm not sure. But comparatively, what we saw that was realized as a profit is still much, much less than what we saw recently in March. 37 billion compared to what we saw. I think it was, if you look at the 28th of March, it went to 65 billion. So the number was high, and you could see their profit being taken, but it's still almost half, close to half of what we saw in 2021 or in March 2024. So there's still some room to grow and some room to take profit, but who knows? Maybe tomorrow something, external factor might scare the market, the bull market to stop, or no, we might get an incentive and double the number and go to 120 billion. Just for sake of comparison, I thought this number might be interesting.
Also seems like they've had enough time to get that metric higher, the profit taking.
Yeah.
But yeah, it seems like it's growing slower than the previous instances.
Yes, and when you see we hit at the top, we were fluctuating between 65 and 72, 73. They had some time, and that's where actually the top start to form. But right now, it means we're just legging up. You could see the slowly is increasing, and we have not reached that, a little bit plateau zone yet. So speaking of profit, and we just showed, it's rising up. The question might be, who was selling anyway? During this rally that we had up to 92. When we look back in March, this chart is showing the profit that been taken on an hourly basis. But it's smooth by 24 hour. It shows how much profit been taken on an hourly basis. And the blue line shows how much of that profit was taken by long-term holder. And the red one is showing how much that profit being taken by the new investors. The distinctive point that I want to actually point out is usually let me just zoom out and go back in 2021. Okay, this is here. Just because it's hourly, takes time to load. Usually when we hit the cycle tops, when the actual cycle top is being formed, we should focus on the long-term holders because they've been waiting a long time. And when they start to exit at very high and in terms of volume, very high volume, and they do that profit taking over a sustainable period, you can be scared. Okay, they're taking too much profit and they're doing it for a long time. If you look at the recent rally, yes, we see an up. They just, you can see a little bit jump there, but when you zoom out and look at last couple of months, it's just the beginning of their spending. And I'll explain in a couple of minutes why they have not been spent all the way from 58 to 90,000. I'm going to show you what was the main reason they did the spending. But my point here is the recent rally. When you look at both short-term and long-term holder, it was when you look at the relative ratio, it was mostly the profit was taken by the recent buyers, not the long-term holder. And why long-term holder are important? Because, like I said, they are the one that when they start to spend, they are behind the top formation. Their role in forming the tops and bottom in a cyclical time frame is very, very important. And the recent rally, it was mostly the short-term holder were spending. And like I said, the ETFs and big boys were buying, and we might have much more room to grow in terms of like waiting for them to spend. And when you look at the historical number, their behavior before, this chart is the best chart that I always like recommend everyone to look at it. Let me zoom out. What is this chart showing? This chart is showing a couple of things. First of all, this blue lines is showing the cost basis of long-term holder. This the light blue one. Do you see the light blue one, Sina?
Yes.
Yeah. So the light blue one is showing the cost basis of the long-term holder, which is around like what we are right now. We're speaking is around 24,000, 20.4, 24,000.9. 24.9 thousand is the cost basis of a long-term holder. By long-term holder, we mean the people or the investor that entered the market 6 months or more than 6 months ago. When we look at their spending, they have different incentive or different structure when they're spending their coin. The light blue one, we look at this one. This is the 24,000. The light blue one, this one, is when the long-term holder, when the price is close to this lighter blue one, is when they're spending at 50% profit. The gray one on the top, the gray line on top, is when they're spending on 300%, which is almost 250% profit on top of what their cost basis is. So depending at what profit margin they're spending, we can identify what is the incentive. And when they're spending below the dark blue line, which is their cost basis, means they are spending in profit, in loss. That means they are spending at actually they're capitulating. And we pointed out these zones by the red color. Do you see like this when they're spending at 25 or more loss? And when we are above the cost basis up to 50%, that's the orange one. You see this some orange one. That means yes, we are out of the bear market. They're spending on some profit, but it is not much. Comparable with what their profit they're taking. Is between 0 to 50%. Between 50% to 150% to 350%, which is the yellow line. That means they're taking profit, but it's mostly the one that the long-term holder that bought at the bottom. And when they're spending at 350% and more, which is these green zones, that is the long-term holder that waited more than one cycle. They waited a long time, and they were waiting for a specific price to get out. They were looking at a specific profit margin to get out. When you look at the after FTX, yeah, you could see sometime they were spending, but their profit was not as significant as we saw at market tops. When they start to spend in early March, they were spending briefly at 350% and more profit. That was actually where the top was forming. And after we crashed below their high band, which was back then, it was almost when was it? Mid-April, they stopped to spend because they were not at that profit level anymore. All the way they were waiting. We had a couple of spending by long-term holder, but if you look at these spender and go 6 months back, they probably were the one that bought here. As soon as we broke about like the 87,000, you could see their start to spend again. So that uptick that you saw in their profit taking that I showed you in the previous slide, actually here, by long-term holder, it was because they just entered to that 350% plus profit. But in terms of how long they keep spending, it is nothing. It's like almost a couple of days compared to 1.5 months in early 2024, or almost 3 months, 4 months in late 2020 and early 2021. So yes, profit-wise, they are entering to that euphoria when the long-term are spending, but time length-wise, we are just the beginning of that phase for long-term holder. So we have to keep looking at this chart and see, okay, how long we're staying above that price level, and are they spending on that profit? This is the most important metric when it comes to looking at the long-term holder behavior. How much profit they are sitting on, and how intensive is their spending. So I want to close the discussion about the recent rally. Yes, it was a huge move, all-time high across most of currencies. The institutions were behind this rally. You could see clearly how much money was added to the ETFs. You could see the spot market and Coinbase was heating up. The perpetual was heating up when first we hit plus 90,000, but it cooled down right after quickly. Looking at the cycle and behavior of long-term holder, yes, we are entering to that profit-taking zone, but it is just the beginning if we repeat ourselves. I mean, if we repeat our cyclical behavior.
Yeah. Exciting. So, again, seems like all the analyses align, and they point towards the fact that we are getting actually kind of the way I visualize it for myself is through this one, right? It actually feels what you explain essentially confirms what I feel based on this chart, right? So we are about to enter the FOMO, but there's a lot of it that hasn't happened. There's a lot of new price action that could happen moving forward. This, I also talking to people, I'm getting signals that people are thinking about selling. So I'm getting questions: is it a good time to sell? Not, but if just from a few people, still most people think we're going higher. So we are beginning to hear some people would kind of take profit here and there, and that's exactly what you also show. As we go higher, again, we are still in this sane part of the cycle, like rational part of the cycle. But as things move on, you will see the $10,000 moves is just going to become common. And that's going to play with people's psychology a lot. People just go crazy. And when you're making a lot of money, it changes it changes your behavior, right?
Yeah.
Then that's when you start to feel everyone everywhere around you, is bullish and thinking we're going to the moon and so on. And I just psychologically, I feel that on the trend valuation charts, we see that on the on-chain data, we see that. So it's basically like water, a pot of water that's on fire, and it's just beginning to boil. You're beginning to see the first few bubbles, and more is to come. So we are about 1,500 live viewers, to be exact, 1,463. This is amazing. This is across all the platforms we are streaming to. So thanks a lot for watching. If you guys have any final questions, let us know before we close. But I think this was a great day so far. What do you think, Z?
Yes, like let's wait 1 minute if anybody asks question. I don't have access to Twitter question actually, but if someone asks question on YouTube, I'll be happy to answer.
And maybe by that time we reach 1,500.
Yeah, but I mean, all in all, Sina is looking great. And when I see all these charts, it is hard to say, like, how can you be bearish when you look at long term? And more you look at these charts, you become price insensitive. Like these ups and down 5 or 6,000 become actually a joke to you. And I'm not saying just because I'm over bullish in Bitcoin. It's just literally when you look at people who are spending and the people who are hodling, and the hodling incentive and sentiment is much stronger than what we were having like in 2020 and early 2021. It makes you bullish. I don't know how it can be bearish looking at this data, but again, I don't want to just say, okay, market Bitcoin is going to go up forever and it's going to be 1 million next month. No, when the price is right, there are going to be some sellers for sure. And as I showed, above 87, long-term holder reacted and they are starting to spend. But the question is how long? How long? Historically, they could sell for 1 month to 3 months, or 2016, 2018, they were actually selling for more than, I think, 9 months, the long-term holder, and still there was some demand. It is almost impossible to predict the demand side, but from the supply side, they were waiting a long time. Like Czech put it out, put out an article called "Chop Solidation." We have been in 5 or 6 months chop solidation, and now you're seeing the result. Like they were waiting, waiting. Now the supply was, I mean, you could see the supply shock, and now price is up. After 87, they start to spend. It's just the beginning, and I hope the demand side doesn't get exhausted anytime soon.
And we got the golden question that everyone wants to know. What's the all-time high this cycle? What
Uh,
are your thoughts on that?
it's it's like I mean, it's just a game. No, I don't believe in giving exact number, but let's just play the game. Personally, if we see something between 120 to 150, I see that reasonable. I mean, in Q1 2025, unless something crazy happens. And I don't know that Bitcoin reserve they're talking about, that could be actually really important if they start. I'm not sure if they're going to buy the Bitcoin off the market, or they try to put that treasure together by what they get out of, I don't know, different, they confiscated from people through, I don't know, courts or anything. It could be through different methods, but that could be really, really interesting if they start to buy off the market. That would be crazy, and that's definitely going to affect on the market. But if I was seeing 120, 120 to 150 by February, I wouldn't be shocked.
So that's actually aligns not too different actually from what I have here, the quantile model. So what you were talking about, like early next year, so this would be these numbers. And 150, you said, kind of falls right in the higher top half of the FOMO region. Totally reasonable. And then just to clarify, what I have in this model is not a price prediction; it's a distribution of prices. If you remember anything from your stats class, distributions actually don't have an end. Most of them. If you think in terms of a normal distribution or something like that, um, log normal, anything. It has an extreme high and extreme low values, but what you can do, you can assign probabilities. Of course, a normal distribution, for example, can go to positive infinity, low or negative infinity. Just the probability is very low. So I don't think it just makes a lot of sense to say this is a single number that I commit to, but I'd like to think in terms of probabilities. And as you can see, what I have here, like for example, just for this chart, I'm continuing extrapolating to 2026, and this tells me if the prior pattern continues, and that's a huge if, right? But if we accept that Bitcoin will continue to behave as it has done by the end of the next year, the range of values would be this. So I would assign a very small probability to going higher than 285, but I just don't like to rely on singles numbers like this. Like, you simply have to watch the data as we move, and you will see. I mean, you will see when the risk builds up. If you look at the analysis charts on the right metrics, you will see that you're getting close to the top, and that's all you need. If you need to make a decision or something, you don't need to know that like 2 years in advance. Um, Sometimes maybe for options trades it helps to know in advance, but for most people, you can get a really reliable signal by understanding what's going on around you, and you don't necessarily need to predict things months in advance. That's my take with a lot of caveats. All right.
Yes, yeah.
So thanks a lot, man. You brought us another report, a very, very detailed report on what's going on, who is selling, what are the differences in this cycle from the previous one. We looked also at the status indicators, some of the valuation indicators, and the status of the futures market. And we hit that number, 1,500 live viewers. Thank you, guys. And this will be available on Twitter and on YouTube as well. Give Crypto Wizard a follow, definitely, if you haven't. Brilliant Glassnode analyst. And follow our YouTube account as well to get more of the same content. With that, I thank you all. Thank you, Z, and I'll see you next week.
See you and happy all-time high against,
Oh, oh my
I mean,
God.
in general, I mean, we're gonna get we had one in a couple of days ago, and I'm just seeing the all-time high coming again. So happy in
Oh,
advance.
okay. Early congratulations. Yeah,
Yes.
awesome. All right. Bye bye.
Bye.